Hello everyone, hope you've been well. Today we're going to be discussing the story that's making headlines in every media and news story throughout the week, and that is Gamestop. This is a real-life David and Goliath story, and in certain ways it's been extremely frustrating to see how the situation has developed with how many false narratives there are out there, spun by the main media and spun by politicians. Let's get right into it. To give a real brief background on the situation, GameStop stock has gone up just dramatically in the last 3 to 6 months. The first movements started around January 11th of this year. If we go into the chart here, you can see there was a nice little bump up here from the 8th to the 11th. This happened when Chewy co-founder Ryan Cohen came on to GameStop to assist on the board of directors. If the company Chewy sounds familiar to you, it's because they are a company specializing in online sales of pet foods and pet healthcare. They might also sound familiar because Chewy is part of my growth portfolio, and they had a fantastic 2020 due to the COVID boom. So Ryan Cohen came on board to GameStop on January 11th of 2021. That's when it was announced, and it caused a pretty decent bump up for the stock of roughly 15%. This really starts to kind of get the wheels in motions for starting the upward momentum of 2021. As you can see on the chart, GameStop is now up a staggering 1,900% from just the beginning of this year alone. We had $17.25 and now we're at $325. For some reason, Yahoo Finance doesn't show the absolute peak, as the peak of this stock actually hit $483 this past week. What we also need to talk about is the subreddit Wall Street Bets, which I should mention, they've also added millions of subscribers these past few weeks. They're up to 7 million as of this video. And a user in particular who's, watch out for the name here. His username is Deep Fucking Value. He noticed that this particular stock had an absolutely preposterous short position of 140% at the time. And actually, I figured I'd share this right now since I think it's absolutely hilarious. Times Square right now with the tag YOLO, you only live once. Somebody bought a billboard that just says GameStop go burr. So to go back to the 140% short position, basically what a short is essentially the complete opposite process of what people are familiar with, where you buy a stock first and then you hope to sell it later at a higher price. So when you're shorting the stock, you basically borrow money from the broker to sell the stock off to someone else at the market price, which for this example, I'm just using $100. And you're hoping to buy it back later when you have to pay back the broker. And you're hoping to buy it back at a lower price. So then in turn, you're making the difference. So in this example here, I've got you're selling it at the market price of $100 to someone. You're hoping to buy it back at $90, so you're making a $10 difference. That's a $10 profit for you. Now, obviously, the opposite can be true, where you sell it at $100, the stock price actually goes up $10, and then you have to buy it back at $110. So then you're losing your $10 plus the fees and the interest. So why the broker does it, when they give you or they loan you this $100, they do charge interest on it and they charge a fee for loaning it out to you. Now, what's crazy is you might think, how do you get up to 140%? Basically, what that means is of all the shares that are available for the GameStop, 140% of those shares were short. How do you even get over 100%? Well, the broker can actually use the same share and loan it out, quote unquote, to multiple people. So if they had 3 people come to them all wanting to short the stock at $100, and the broker can go, okay, I'm going to loan it to each of you, right? We're going to charge you the fees and the interest. So on that same piece of stock, the broker can make 3 times the amount of money. Now, there is risk to the broker as well, because essentially when you short that stock and you're selling something you don't have, that's effectively a loan from the broker, right? So if, for example, we go back to GameStop, they loan you the money anywhere down here. Let's say it's $40 a share. Now it suddenly skyrockets to $75 a share. that broker has now effectively loaned you extra money than they were originally anticipating, right? So what happens is the broker, due to the extra risk that they're taking on, they can now they can now do what's called basically a callback, and they force you to cover your short. What does that mean? Basically, if, let's say for this example, they deem the $76 mark the unacceptable mark, you either have to put extra money into the account so that if anything were to happen, the broker is reassured that you can actually pay back this loan, or you are forced to buy it back at this price. You don't have an option. The broker goes, they ring you up and they go, you got to pay this back, and legally you now have to pay it back. So what that can do is that can cause what's called a short squeeze. Basically, everyone that is short, if they were shorting it all the way down here when it was low, and now it's skyrocketing, all the brokers are seeing all the extra risk in the stock. They force everyone to purchase it back, and what that does is now there's two buyers going in, right? There's double the volume. There's the people that originally buy it to hold it and see it go up, and now there's the people who originally thought it was going to go down. Now they actually have to buy it back. So you're getting twice the upward pressure, which results in a extremely high skyrocket. Now, all that's well and good. There's been many examples now of people posting on Wall Street Bets with, people in their teens making tons of money, or people that gambled and put in 10,000. It's now worth 100,000. I think those are all really good stories. But the most interesting part of GameStop to me is the story of how the stock market operates, right? There's always been a historical notion that big money or hedge fund money, that's known as the smart money, or quote unquote smart, versus the little guy, which is the common retail investor known as the dumb money. These people seem to believe that us retail investors don't know how to do any analytical research or fundamental analysis and are just putting our money into stocks without understanding the risk whatsoever. It's like we're walking around with our heads cut off, right? That's how they think that we deal with money. In fact, the constant stance of looking down upon us is, in my opinion, what is causing this to happen to a bunch of meme stocks around the market. Here's a perfect example of this on the CNBC interview with Chamath Palihapitiya. I'm sure I completely butchered that name.
Here. I have a hard time believing, you suggested that there's, a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund.
And this is incredibly true, right? Retail investors now basically have access to a lot of the similar tools that these hedge fund guys would have. There's a bunch of websites that can go into really deep fundamental analysis or technical analysis, or there's a bunch of sites talking about swing trading and value investing. All these, due to the internet, there's so many resources out there that we can get as much access as they can, right? The only thing that we don't have access to is we're not privy to the backdoor shady, closed room meetings, but that's FYI, that's called insider trading, which is actually illegal. Now, the only part that I do think that is worth bringing up is this stock doesn't seem to be trading on fundamental analysis right now or anything like that. But I think that that's because he's really missing the point, right? In my opinion, GameStop is booming right now as a stock because people that are buying it are trying to stick it to the shareholders. The biggest short position in GameStop was a hedge fund by the name of... Now, they've said they've since sold out of their position, their short position, but they've taken it on the chin hard, billions in losses, and they actually at some point this week had to get another $2.75 billion just to stay afloat from their short position. So It is true that I would say the stock is no longer truly about fundamental analysis or momentum trading. People are buying this stock and asking others to hold so that they can band together to land a blow on these Wall Street titans. This is a real life transfer of wealth from the rich to the poor, which is the exact story of Robinhood, which is ironic, as we'll get into Robinhood later on in this video. Chamath, I think, outlines a very similar point here.
Who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
I read a story on Wall Street Bets, which I'll link below in the description, which I think is such an extremely important point about how the '08 financial crisis hurt tons of families. He talks about making tomato soup from ketchup packets to survive for food, or once they started getting on their feet, their dad was quote-unquote hiring, aunts and uncles to help out around the house so that they could feel like they had a sense of purpose since they were laid off and couldn't find any work. I recommend you guys give it a read as well because it's quite touching. The government bailouts back then only helped the big hedge funds and did nothing to support the little guy. So this is the chance to fight back, right? Everyone always says vote with your wallet, and that's exactly what people are doing right now. They're buying Gamestop and they're trying to burn these hedge funds that are short. Here we get to the most infuriating part of the story. Throughout this past week, we've seen companies start to restrict trading on certain volatile stocks. Robinhood is one in particular that has gotten huge amounts of flack as they have always touted themselves as a company that wants to support the little guy. Their entire stance has always been that they want to support everyone, and especially retail traders, so they don't charge any commission for trading so that anybody can get in. This means that Robinhood's main source of revenue doesn't come from their commissions or traders, but from their clearinghouses. So to execute a trade, a brokerage sends the order over to a clearinghouse to execute the trade on the company's behalf. In exchange for doing the transaction, the clearinghouse pays the brokerage a fee to have access to that information. Well, as you can see, Robinhood actually sends, so it says here, Robinhood routes more than half of its customers' orders to Citadel, by far its largest market-making partner by volume, which they disclose. The app also does work with other firms, but if you think about Citadel, if we go back to the $2.75 billion that Melvin, it was actually Citadel that was part of the loan into Melvin Capital Management. So you've got Citadel, a large customer of Robinhood's, accounting for a very significant portion of their income stream, lending money out to Melvin Capital, who has a large short position on Gamestop, which is, reminder, they make money when Gamestop stock goes down. That sounds like a direct conflict of interest. The loan happens on Monday, January 25th, and then Robinhood starts restricting trading on Thursday, January 28th. And what's funny about the restriction is you can only sell and not buy the stock. Well, that is now going to put extreme pressure on only one way the stock can go, obviously down. And you can see it very clearly in the chart here. At the beginning of the week, it's totally fine and dandy. On Thursday, January 28th, like I said, Robinhood restricts trading. And you see a huge drop in the price. Of course, because you can only sell, you can't buy the stock on Robinhood and other platforms as well, to be clear. So you've got huge market manipulation, or what seems to be at least huge market manipulation for this. And to really top it all off, now that you've got big hedge funds losing, you've got people calling for regulation in the market somehow. Well, where was the regulation in the market when hedge funds could short 140% of a stock and drive these companies into the ground? These companies employ real people with families, and you've got big hedge funds just completely pummeling them. Where's the protection for the little guy in that situation? Now they're trying to change the narrative to say that these regulations are to protect the unsophisticated investor, which sounds like, quite honestly, the most disgusting spin I've ever heard for this situation.
The Commonwealth of Massachusetts calling for a 30-day cooling off period for some of these names. Secretary Galvin, so go into why you believe that we need to maybe just put a hold on GameStop and some others.
Well, first of all, it's a great risk to many of the unsophisticated investors who are investing in it, whatever their basis is. I've talked to some of these people. I think we've all recognized that the current pandemic has created a unique situation where many people have gotten into day trading who really have no idea exactly what they're doing. It's something that they're trying to figure their way as they go. These types of entities, such as GameStop, have created a really difficult situation for these people. They think they're missing out if they don't make a bet on them. They don't really understand what they're doing. I think small-time investors like that, unsophisticated investors, are going to be hurt.
How many times does he say unsophisticated investor and retail investor and little guy? Like, it's such a manipulative spin on what the story is. I think it's ridiculous. You know, if you browse that Wall Street Bets subreddit, there's tons of people that are saying it doesn't matter if they lose their money. You know, they're in it to stick it to the hedge fund guys, right? Everyone in that subreddit, or the majority of people, are fully aware of what investing into the market means. Whenever you invest into the market, regardless of whether you're a retail trader or a hedge fund, there's risk, right? And it's a speculative investment. If you're long, you think that the company will do well, it'll turn a profit, and you'll get that money back with appreciation. If you're short, as we've discussed, you think the opposite, right? Risk and speculation are always going to be inherent in the market. And to try and spin it off as saying that we need to try and protect the unsophisticated investor, it just seems extremely disingenuous. The timing is extremely fishy, and on the one hand, I'm very glad to see how transparently and how blatant they're trying to spin this. So you can really see how the stock market can sometimes be just a tool for the wealthy, right? And I think that the longer this goes on, that light of transparency will get shown brighter and brighter. And I think in the long term, that'll be a really good thing for the financial market as a whole, and for, you know, the retail versus the Goliath trades that we're seeing today. This situation is so egregious that you've got people like AOC, Ted Cruz, Donald Trump Jr. all on the same side. It's hilarious, but I think 2021 may actually be the year of the apocalypse. You know, what are the chances that you've got all three of those people on the same side? You know, 2020's got nothing on this year. This is obviously an ever-changing story, and I'm sure by Monday we'll have heard a lot of other things that come out over the weekend. So I'm definitely going to update this as it goes. It's extremely fascinating, and I actually would encourage all of you guys to go check out Wall Street Bets. You know, it's a fun browse. It might not be everyone's cup of tea, and it's definitely not PC, so keep that in mind. But if you want to side with the retail investor, and if you want to side with the little people, quote unquote, might be a fun browse. Thanks for watching. Leave a comment. Let me know what your thoughts are on this story, and subscribe and like if you can. Thanks. Bye.